so Bootleg Weekly, I guess, is they wanted to start doing a show on Wednesdays, I guess, ahead of 10 or not instead of ahead of Tanner going live, because I think Tanner goes live at Wednesdays at this time, like when we're talking right now. So I think they wanted to like have their own sort of SoFi-ish, fintech-ish weekly without, impeding on another live show, I guess, to just be friendly with folks. So
let's do a quick reaction video. Jesse Dow did a analysis on Celsius. Someone sent me. I had to find it, his live stream today. I haven't seen it yet, but I want to see what his reaction is.
Was that a pre-recorded video? Because he was live earlier.
He does it live. He does it live.
Because I wasn't sure if it's because I wasn't signed into the app or because I didn't see a chat. I probably wasn't signed into the app. Yeah, it looks like I wasn't.
All right. So this is his analysis of just charting for Celsius. It took me a minute to find.
All right. Celsius Holdings, the drink company, the one everybody loves. Is it really that good, or is it just some stupid? I'm not pulling up Nikola. I'm not pulling up Neo. Sorry. Those are like two.
If you ask him, it's not good.
All right. I mean, Nikola's just straight up fraud. This chart looks pretty beautiful. I mean, it's above all peak volume candles here. Like, this thing looks tight. God, what a beast. I can see why people like it from a stock perspective. I don't know if the drink's any good, but can we get something different than $1 billion companies? Yeah, maybe. Members take priority, so they're the ones that get to go first. Yeah, this looks great. Again, this is kind of like a bull flag. So just a quick look here. I would expect this thing to break out soon. If the market holds up and we don't see any, like the S&P or the NASDAQ dropping, this looks like a bull flag and like it wants to go higher. And it looks like, I mean, the MACD looks like it's getting ready to cross higher right now. So I could see this going up. Celsius might just be going higher. And it looks like based on their earnings and stuff, they have a right to. Mm-hmm. All right. Let me see. What is it? Sana? I don't know what that is. Baba's not in great shape. I just showed that one a little bit ago.
Okay. I think that's about it.
Let me see. I can pull that.
But if you think about what he's looking at, right? I'm not a technicals guy, so I'm going to butcher it. But if you think we're literally 21 days out from earnings, right? And if you think about that consolidation that's been ongoing, it's likely that you're going to have an opportunity where you start to see this step change in really what it's been going on. Now, of course, that could be offset wholly or partly by these continued sales that have been going on from unfortunately the heir passing away, and the normal, I guess, call options that are having to be executed, like we kind of looked at last night, or you kind of brought to our attention, Chris. But I'm bullish, man. I think it'll continue to run. I might. Anyway, I have my calls. I wish I bought more, but
I doubled down. I bought more calls so yesterday I sold calls thinking that I got lucky because some guy executed $8 for the $100 strike for 2026. I was like, oh man, I got lucky. I was able to pull out so much money. And they actually ran up a little bit even higher today. So I was like, okay, I need to take advantage of this. So I ended up buying the $75 calls this morning, and they're up already, which is good. Yeah. And I sold the 100 call again. So right now I have a lot of $100 against my $65 and $75 calls, but it's good. Hopefully there's like a binary move because it's way above my price target anyway. So I got a pretty good discount for these. I mean, it is what it is. I think, like I said, the company's trending in the right direction in terms of their profitability, their revenue. There's really not a lot of downside, in my opinion, at this point. I know a lot of people will look at the history and just say, oh, look, it's already run up 40,000%. Like, why would you want to buy a company like that? And I'm like, yeah, the fundamentals, though, still have a lot of room for it to grow further up. That's like the same person that says, Google was already up in 2015 by like 500%. Why would I want to be in it? And I was like, yeah, okay, congratulations. You missed the other 2,000% that it's grown since, Yeah. So I think that this is a business that scales very quickly, scales up. It'll be good.
I'm not down on my leaps, but I'm surprised that because I bought my leaps, I think at like the 52.50, $53 range. So there could have been
Mhm,
some better optimization. Like that's not the strike I bought, but that's when I bought the contracts when the strike
mhm.
when the stock price was there. So now that we're at
What was your strike? What was your
I
strike?
bought the 50s. So
Uh,
the fact that we're up around 57, almost $58, and the fact that the leaps haven't moved as much as I thought is actually kind of surprising to me. But I
well,
think
that's
once
because
we
you're
get,
near the money. You're in the
yeah,
money, dude. Yeah, that's why. If you were out of the money, dude, those are
I still
riding
don't
off
even
the
think so
trajectory.
because I was looking at the 60s and they were at the time of me looking at them were like 17, $18, which is why I actually went for in the money because
What do you think I bought them for?
I know that you were buying the 65s for 13,
Mhm.
12,
I bought
13.
them. I got them for between 12.75 and 13.25. Like I have an average of about like low third, like not low 13s, like right below 13. So
Right.
like 12.96 or whatever. Right now they're quoted because the spread is so wide. I think between six. Let me just look 1 second.
That was the problem. I think that for me, I should have been a little bit more patient. The spread was about $2, maybe more when I bought them, and maybe I could have been a
You
little
didn't
bit
do a market
better.
order. You didn't do a
No, no,
market
no,
order,
no,
did
no.
you?
I do limit orders for options. You're
Okay, good,
stupid.
good.
Yeah, you're stupid. Most of the time, if you have a very liquid stock, you can do market orders and you won't get burned that bad. But when you have something like this, when you're talking about leaps or you're talking about something that's so far out there, you're going to get effed. Um,
Yeah. So
so yeah, I was fortunate.
the bid and ask on those right now is 15.90 for the bid side, and the ask is 17.60,
Yeah, that's
which in
wide,
the
man.
middle is like 16.75. So basically, I'm up, the dollar amount that you have. So
The money makers are just the market makers. I mean, are just absolutely printing money on Celsius right now. I mean, a spread
yeah,
like that's just absolutely insane. But yeah, I mean, I'm up 10% on it. I'm hoping that that it's a long hold for me. I hope my thought process is going to go to the $70-$80 range by the end of the year. And once you get to that point, I mean, you're talking for every dollar it goes up, you're talking 80 cents, 85 cents of it adding directly to it. So I'm confident that it'll be fine.
you didn't do it as
Um,
you did it just naked calls, right?
yeah,
You just
naked. Yeah. And then um, I bought back my $60 calls twice now and made profit on both ends. So
Oh,
now
you
I
mean the
think
ones that you sold, the ones you sold, right? Gotcha.
because my thought process is just chip away a little bit at the long call side. And so once we get to the earnings time frame, I think we'll blast through, and then I'll probably wait for it to spike up, and then sell some more calls, kind of like the hundreds, like you're talking about. So
You know what? I'll do something for you guys. I will give you guys what the price target is and how I derive the price target. Basically, because someone's asking and they're like, "Oh, okay, what is the time frame?" Blah blah blah. Let's just do a quick analysis, just so that people understand. First and foremost, you have to create a model, right? Like where you think it's going to go, and then you have to figure out how you're going to value it. So let's wait. Hold on. They rigged to go higher. They dumped the losers. Yeah, that's true. That's absolutely true. Uh, so let's. Do you want to go through this with me, or you think we
sure,
should?
yeah. I mean, yeah, I don't necessarily.
Okay, so let's do this real quick. So share screen.
Yeah, I don't have an agenda other than catching up with. I saw your somebody sent me a screenshot of you thinking Palantir is going to zero. So eventually we'll have to talk about that.
Okay, so the first thing is let's figure out from a forecasting standpoint where Celsius could possibly go. This is where you have to do like a lot of fundamental research. You have to go back into your own models and create a thesis. But this is what the analysts are saying right now. Okay, not me, not Chris Patel, just analysts. This is what they're forecasting essentially, and some forecasts vary on how much they're going to grow. So according to them, the growth in 2024 at the average is going to be about 40%. The high is going to be 63%, and the low is going to be 25%. So what does this mean? That means the revenue is going to be growing at a different pace depending on which analyst you speak to, right? So usually the average one tends to be somewhat close. Um, I personally think that it's probably going to be between the high and the average rather than the average. So I'm guessing about 50% year over year growth. So according to my model for 2024, it's 50% growth. So if I'm assuming a 50% growth target for them on a revenue basis. So you look over here, what is the revenue going to be? This is the one that the consensus is. So you would take the revenue for 2023, which believe it or not is still not 100% out there yet, because they haven't done the earnings report, right? The last quarter they generated 384 million in revenue. Right now the consensus estimate is 339 for last quarter, which I think is actually very low, but it could get there because of seasonality. So I'm not saying that they can't, especially on a year over year basis, still 90%. But let's say the analysts hold true, right? So you're looking at about, what does it say if on an annualized basis, 1.3 billion for 2023, and if you take 38% of that, so it's going to be 133 times 0.38, which is going to give you, hold on one second,
1.84.
1.33. Yep. So their targeting is 1.84. I think it's going to be a little higher. I'm assuming about $2 billion because if you look at the historically, they've always beaten on top line. So if they get to $2 billion, then you look at its nearest competitor, right? What price to sales does Monster trade at? So right now you can look at this one and go to its financials and you can see on a ratio basis, what is the price to sales? The price to sales for this company right now, 11, 12, 17 when it gets super overvalued. But right now it went from, no, sorry, this right here. So it's actually 11. So in 2020, when there was like a lot of market distortion, there was like, it was really high. But right now they're a little bit more mature. So it's about 11.65. If you look at its nearest competitor, like Monster, MNCR, they are doing the same ratio. They do about 8.9%. So if you look historically, it waffles between 8 and 11% price to sales. If you look at the margin profile for both businesses, they're relatively the same. So if you look over here, the only difference is Monster's revenue is growing about 15%, whereas Celsius is about 100%. And according to the analysts, next year's 30%. So if you look at just purely on margin, Monster has a 50% gross margin. They have a, what is it? Where is it? Profit margin about 18%, which is not really that important. But I think the gross margin is the one to look at for an equivalency. And over here on the EBITDA margin was they're about the same, if not less a little bit. So now let's look at Celsius. Same exact business because they're both in the energy drink space, whatever. You can see here that their gross margin is about 41%, so a little bit less than Monster, but their growth rate is actually pretty good. And at the same time, if you look on a quarterly basis, they're actually trending higher up. So now their gross margin is almost 50%. So basically, you can value them pretty close to what Monster already does. So if Monster is selling at price to multiple of like eight, you could technically, give it a little bit of premium and say, okay, the price to sales on Celsius should be at least 8, if not more. Technically, in my opinion, it should be like 9 to 10. But let's just take one step back and say, okay, whatever, it'll trade at the same price to sales as Monster. If that's the case, and your estimate here for Celsius is going to be $2 billion in revenue for 2024, right? So you would take $2 billion times 8, 2 billion times 8, that gives you a $16 billion market cap. Divide that by 231 million shares, which is outstanding, right? And you multiply that out by 100, so it gives you $70 a share, right? That's the price target for 2024. You want to do the same thing for 2025. For 2025, you want to know what the price is going to be for this company in 2025. Let's assume that they do about 2.7 billion in revenue, which is a little bit above the analyst projection. The analysts are predicting 2.4. So that's 2.7 times 8. gives you 21.6 billion in market cap, which means if you divide that up by shares outstanding, it's about $93 a share. That's conservative. Okay, conservative basis. By 2024, it should be $90 roughly, not between $90 and $95. That's how I got my price target for the upper limit.
Yeah.
Did that make
I mean,
sense at all?
yeah, and I think the one thing that I wanted to relate this back to just normal kind of daily doing business, right? I think this when you start to stack numbers like this, that's when like something comes in at say instead of a 50% earnings growth, it actually or not earnings growth, revenue growth, and it comes in at 40%. That's why you see the stock drop drastically, right? Because you're stacking year upon year in some of these cases. And so when you actually bring it back to what stock price should be, that's when you start to see like that's why things get moved and they move 15% or something in a day after some of these earnings reports come out. And I think you're onto something, Chris. I think the way I look at it is slightly simpler. I think that we're getting to a place where in the next 2 years, earnings per share should be close to $2. We're at $60 now. That's a price to earnings of 30. I think it's going to continue to grow and I'm okay paying a price to earnings for fiscal year 25-26 earnings of 30 if it's going to continue to grow at a decent pace of 15 to 20% per annum. It's the same thing that goes on with Google, right? Like I'm okay paying a 25x multiple on this year's earnings. In fact, because if you look 2 years from now, it's a 19x in 2025, right? It's like it's stupid to not buy some of these companies when they're growing at the pace at which they're growing. And so I think with that, I think that's where I'm at with Celsius is I see it as something that's growing at 30 to 40% rate. I think actually it's going to be closer to 50, 60% personally. Maybe I'm being a little bit too optimistic for next year, but or for this year particularly. But if that's the case, then paying a PE of 30x for next year's earnings, isn't that crazy? And so to me, I think that that's something where if you think about it and you continue to deliver and your margins are continuing to get better from a growth standpoint as well as a net standpoint, then overall that's going to be something that is something to write home about. But I think this quarter that they're predicting under 350 million for the revenue, I think is just kind of insane. I mean, everything else for the rest of the year is designated that it's showing up 90 to 100% year over year growth. I don't understand why the fourth quarter wouldn't be the same. They're predicting something like a 75, 80% year over year growth. Because it was like 177 last year in the fourth quarter. So if you think about 177 and you do let's just say a 1.8, yeah, they're talking about something like 80, 85% year over year growth. And within the last month and a half, so the very tail end of the fourth quarter, I've not seen something as strong of branding like Celsius in quite some time. So I have a feeling that they're going to have a blowout fourth quarter and it's going to send the stock higher personally, but I could always be wrong. And I've been wrong on some of these things before, but I'm with you, Chris. I think you see 75 by year end very easily, and it should go into the 80s next year.
I'd say I don't know what the analysts are smoking, but they've been consistently wrong about 10% per year, usually even 17 if you look at the years prior. So if you take the revenue forecast that they have, multiply out by, let's say, 10% higher, you could see that it'll be better. So that's what I would do in this scenario. I just take whatever whatever these guys are saying and then boost it up by about 10%. And that's how I would model it. Because I mean, you look at the consensus, they've always been somewhat under. And I think the company's has a lot of tailwinds behind it with expansion to Canada and the UK now. So there's new markets that are opening. They're still gaining market share here in the US. So and they could really blow out this number right here. Like they're really set up Q4 very, very poorly to basically the analysts the analysts have set themselves up nicely to get beaten. I think Celsius is going to beat the crap out of this revenue number, and everyone's going to have to readjust their earnings their revenue forecast going forward. I mean, this is why some of these analysts, man, they miss things, So we'll see what
Yeah.
happens.
Well, I want
By
to
the
give a shout
way,
out to. Sorry,
yeah,
go
go
ahead.
ahead. Sorry.
Go ahead.
No,
Well,
you go. You go ahead.
I was gonna say shout out to the guy giving us 20 bones. Much appreciated, man. Don't feel obligated to do the super chats. Just share with friends, family. We just want to make sure people are seeing this stuff. You know, like we learn from you guys as much as we learn. Sorry. Hopefully, you guys learn from us as much as we learn from you guys. You guys add really good questions into the comment section, and we sit and poise and think about that stuff. And we go into the Discord, and shout out to Chris's Patreon Discord. If you're not in there, it's a hot spot. I haven't checked it today, but I know for a fact it's probably heating up with a bunch of stuff. But I'm in there probably once or twice a day catching nuggets from you guys. And dude, like, I learn from you guys as much as you guys are hopefully learning from us. So shout out to you guys. The best thing you can do is just share with friends and family, because we're not here to be printing money. Chris and I have 9-to-5 jobs. It's nice to be able to make a little bit of extra money on the side, but in reality, this is a hobby for me, and to hopefully get to a place where 10 years ago, I wish I had somebody like me on YouTube spouting stuff off. That was just kind of when Jeremy was getting started and a few others. And so you guys are fortunate. Like, this is an established area now where people could literally pick and choose and learn from people live. And I think that that's absolutely insane. So that's why I do it, to document and hopefully help somebody that was literally 22 years old, starting at $0, trying to get their feet under themselves. And anyway, that's all I have to say about that. But going back to this particularly, like somebody mentioned it, like, when are the international earnings going to hit? Dude, like, I still think that that's going to be a huge year-over-year growth period. I don't know if it's going to hit in 4Q, but in 1Q, I anticipate that those numbers are going to start getting pretty wild, because
it's gonna be probably 2025, not anytime soon.
You don't think it's going to be crazy starting in this year? I mean, in terms of year-over-year growth, I think it's going to be crazy. I don't think you're going to see like hundreds upon hundreds of millions of dollars of revenue, but I think just that's going to be something that I think that should be on the lookout for people. I mean, you're talking 30-40% year-over-year growth from 22 to 23, but we're still talking less than $100 million international sales. I mean, to me, I think that that's something where you could see a couple $100 million of sales generated in 2024, which would be 100-200% revenue growth. I don't think it'll be something that's that crazy. But I think you'll start seeing it trickling up in 1Q, 2Q. But in terms of billions of dollars, like we're expecting out of the US sales, no. But I think it'll still add pretty good revenue growth to the stock, personally.
No, I agree. I just, what it is, usually there's this lag when you launch a product, and then you have to get distribution and everything ready to go. So usually have channel filling, right? Where you have to basically get everything filled up. So they launched this. I'm guessing that the channel is already filled, but remember, it's going to take some time for like the local markets to catch up. It's not like instantly people are just going to go and buy the stuff. So I think incrementally, the momentum will start in 2024, especially the summer, because I think they'll definitely boost up their promotional activities in the summer. If you look at some of the recent deals that they did a partnership with Ferrari for F1 to actually market, like as a sponsor. So if you look at European market has their own special like segments that they heavily follow. Like, if you do NASCAR, Europeans are not watching NASCAR. They're watching F1.
Yeah,
so
you're not doing Heineken on a NASCAR. You're doing Busch or Bud Light. Yeah,
right. So I think right now they're slowly transitioning. They're doing a lot of great promotions there. There's still a lot of room for growth here in the US. Like, their distribution partnership with Pepsi only started in the back half of 2022, and this is the first year where we've seen that start to come up in the revenue. And I don't think that's going to slow down. If anything, it's going to accelerate. And you see this thing everywhere. It's not like it's not a hidden thing by any means. So if you go last year,
that's for damn
yeah,
sure.
if you go last year, I never saw Celsius. I never even heard of Celsius last year. This year, I see nothing but Celsius at Kroger and other places. Maybe I'm a little bit biased because I'm specifically looking for Celsius, but it's literally in every location that would be a high point for buying. So I think distribution wise, they've really gotten on another level. And I think that'll translate in the next couple of quarters. You'll see that happen. And I think a lot of these analysts, they're going to have to raise their numbers up. I think they're woefully underselling it. Like I said, how do you go from 100% growth to 30% growth? Like, what do you think is the catalyst for just the 30% growth now? It doesn't make sense. There's natural deceleration in growth, in my opinion, that definitely is going to happen, but it's not to the level that these guys are projecting. So I'd say take a little bit of put some grain of salt with it, whatever the term is. Even if you follow their projections, this is undervalued because their price target, like 1 year price target, is 70. And if you look at their numbers, the price target should be close to like maybe 85. If by their numbers, my numbers tell me about 90 to 95 on a conservative basis. On a moderate basis, it should be 100. And then if I want it to be aggressive, I think it'll be like 115. So that's where I'm at with this.
Yeah, I think it'll be fun this end of this quarter. I think it'll be fun, and I'm like you said, I don't think they're gonna. You said this yesterday, so anybody that's looking for 30 more minutes of Celsius content, you could always tune into one. I have a video that we talked about like a week ago because this is turning into Celsius Daily, and then we talked a little bit about it yesterday with Tevis, and so that's going live at 10 p.m. Central Time, so 11 p.m. Eastern. On the Cashflow Chronicles channel. The link is in the description. So if you guys are interested in listening to that one, if you missed it yesterday, you can continue to party on, as Midwest Cannabis would say, with that one after this particular hour is up. But I am curious, Chris. I mean, there's some talk about and some chatter about BPYPM and some of these other opportunities, or we could talk briefly about your rather bullish short that you have on Palantir. And I was kind of people were chirping up at it, and I don't think you actually think. Give me some rope here, and I'd love to hear your comments. I think you said you think it's going to 16, 18. I don't know what strike you bought. I don't know if it's going to be a Patreon. Hold on, let me get my little before. I don't know if this is going to be a Patreon exclusive, so feel free to but before you kind of start, we can kind of trim the segment if that's going to be a Patreon exclusive. But to me, it's a reversal play for you. I don't think you actually think it's going to go back to 12 or 14 or 15. You're looking for that. Hey, this thing's toppy at $24. Let me get a little bit of a reversal. And you're not looking for it to go below 20 before I'm sure you take profits. You're looking for that 30, 40% bump just to get that $2,000 in your pocket, which I think is easy money. I want to hear your thoughts.
Number one, you are absolutely right. Someone asked me, like, what's your fair value? So fair value, in my opinion, is way different than actual target value, right? Fair value for Palantir is 16 to 18. That's what I'm saying. Like, I think fair value is 16, 18. If it drops below 16 with the current numbers, I'm a buyer. I think it will be a good time to at least somewhat dabble into the company.
Did Chris say he's a buyer of Palantir at a certain price?
No, don't do that. Don't do that.
I'm clipping it.
Yeah. No. So the thing is, right now, it's run up 40% in the last 2 days, right? I think to a certain degree, the valuation went from good to ridiculous to, hey, this shit does not make sense.
Right. I'm saying that as a shareholder sitting on 4,000 shares, like it's absurd.
Right. So the thing is, that's the part that's where the opportunity is. So for me, I was like, okay, you know what? Let me look at these puts. What are they costing? So right now they're like $1.90 something. So they're rather expensive, but I'm getting the time premium. I'm getting all the way to July. So I'm fine with that. And at the same time, I looked at what the $16 puts were. Right. So what I did was I created a spread. What I did was I bought the put for $21. Right. So it's $1. It's $1.97. Right. And I sold the $16. Right.
That's
there you go. Right. So now what happens is, if let's say, and you could run the simulator on this with Robinhood.
I don't know how to do that. I'm not smart. You know me.
If
you know how to do it, if you know how to do it, feel free to.
No, I don't know how to do it on this one. I don't know how to do it on the online platform. But the point is, for me, I think that this retraces. There's two main problems that are happening right now. One, the market itself is overbought. Like, that's clear as day. You look at the greed, the fear and greed thing, and we've been in greed mode for like the last month. It doesn't mean that we can't go into, we can't be in greed mode for a while. But I think the market's a little toppy right now. You look at the 200-day moving average, it's way above that. And even uber bulls like Tom Lee are saying, hey, we could get like a 7% retracement, right? So usually what happens is these meme heavy, meme favorite companies. I don't want to say Palantir is a meme company. I really feel bad saying that, but sometimes it trades like that. You know, a lot of the retail investors that go absolutely crazy when things go right. So they really wrote it up. And now we're in a position where I think it's overbought. If you look at the RSI, it's jumped up very, very high. So can you pull the RSI on here? I'm not sure if the thing shows for Palantir.
I don't think it shows for this one.
Yeah.
You did a
Can you go?
debit.
Yeah.
Sorry.
Yeah. So the RSI jumped like crazy. I think it's like overbought right now. So I was like, okay, you know what? The risk to reward is pretty decent right now for a retracement. If it retraces back to 20 in the next 30 days, I'll sell that put. I'll make some money on it. I'm fine with capturing the value, and that's it. You know.
I don't know what I do. Oh, because this is February. Let me see. Let me go to the July's. Yes, this is what you had. You have this bad boy.
Yep.
This bad boy here.
Yep. Right there.
So basically, you needed to go back to like $20 for you to break even, but you have until July. Like you're looking at it, you're probably going to close this out before the quarter ends. So, I mean, yeah,
exactly. If the market dumps, Palantir will dump along with it, and they'll dump probably heavier because it's ridden up so much. And like I said, the value of these things will be nice, and I'll sell it with a nice profit, post it on Twitter, and we'll see where things go. And if it doesn't work out, it doesn't work out. Whatever.
Yeah, I think you'll do well with it.
Who knows? I don't really care.
It's absurd, man. Like I was expecting it to run to 21, $22, $24. It's running hot. You know?
Yeah, look at the market cap. Look at the market cap on Palantir right now, dude. It's
like
kind of priced
51 billion or something like that. I forget what it is. Yeah,
it's more. It's let me see. Hold on a second. PLTR market cap. Yeah, 51.3 billion. Right. So it's a price to sales of about 27 and a PE of 258. Now the thing is, you could even justify a 258 PE if you had a really, really strong growth. If you had 100% year-over-year revenue number, sure, you could pay that shit. But dude, you're growing at 20% year-over-year. Like, come on, help me out here. Am I the one that's not logical? I guess.
Yeah. I'm curious. What earnings did you said you didn't look at PAYC, so Paycom. Did you take the opportunity to look at PayPal today or no?
I caught some of it on Amit's stream. I think everyone is really down on Alex Chris, so it is what it is.
Yeah, I think it'll be some opportunity. I'm cautiously optimistic that there's a turnaround story ongoing, but that takes quarters. Like it doesn't, and sometimes years. It doesn't take, literally within the matter of a snap of a hat. Like, anyway. So
yeah. So right now, everyone's like, "Oh, the market's irrational." That's true. The market is irrational, but it is what it is, man. I'd say fundamentally the numbers for Palantir were good, but they were nothing that deserved a 40% up, and then another 7 or 8% today, I think.
Yeah.
So I was just like, holy shit, this is a good opportunity to just, this really is a swing trade. I know people call me Chris the swing trader, but this definitely was a swing trade. Yeah.
Well, I am curious because we haven't talked about BPYPM in a little bit, but I think that this is something that people can take into their pocket and look at, not necessarily BPYPM, for example, but just in general, looking at, and Chris has talked about this in other avenues as well, maybe not for the preferred share standpoint, but there's opportunities to pick up preferred shares, debt, etc. for 25, 30%, 40%, 50% off, and be able to collect that value in the long term. And that's, I think, what we're doing with BPYPM, which is basically buying it for a discount. I think it's at like $13, if I remember correctly, Chris. And I think the call, basically it's basically a call that's saying that the company's not going to go bankrupt, that it eventually will pay itself off, and it'll go back to $25. So we're basically buying it buying a $25 stock for $13 in say a little bit a couple years ahead of time, and in the meantime we're hoping on a decent dividend yield. So the hope is basically you're hoping that the company just doesn't go belly up, and by the time you get to the 2028 timeframe, they give you the $25 and you bought it for $13. So that's really BPYPM. I think that Brookfield Asset Management just raised their dividend today. So I know it's not entirely the same exact company, but overall, Brookfield, I think, is in better shape than I think a lot of people give it credit for. And I think that that'll become evident as we move into the latter half of the year. You start having rate cuts. I think a lot of these companies that have been impacted heavily, people selling off the shares, AT&T, Verizon, etc. I think you'll see the reversal of that, once things become a little bit more evident. And you've seen that in Verizon, that's already happened, but there's still some lag, I think, with some of these other areas. And I think Brookfield Property Management might be one that takes a little bit of time, but it'll come around fully.
Yeah. I think the reason why a lot of people get sometimes the office REITs a little bit wrong is that their expectation is, oh my God, I'm looking at this one building in the commercial real estate space. It's gone belly up. That means that like all of commercial real estate is dead. I need to get out ASAP. And the truth is that's not really the case. There is huge market differences between what is good and what is bad. And right now you're seeing a return to the office already. If you look at the Class A buildings, a lot of them have occupancies that are slowly climbing up. The other thing is Brookfield has assets, not just in the US, but they have buildings in the UK, in Germany, Japan, all over the world. So those occupancies are rather high. So they're fine, man. So the other thing is, I would say people need to understand how the debt markets work also and how non-recourse loans work. Because if you look at Brookfield, they have a lot of non-recourse debt on the buildings, which means that they can just pretty much hand over the keys, throw them to the lender and says, it's your problem to deal with. So a lot of lenders are saying, hey, listen, we don't want to do that. We'll give you a discount. We'll give you favorable rates, So right now, I think if you look at any relationship, people look at the debtors and say, oh my God, the debtors are the ones that are the weak ones and the creditors are the ones that are in the power position. And that's true if it's only one thing. Problem is, when the entire market is jacked up, the debtors are the ones that are in power because what they can do is pretty much dictate what's going to happen. So Brookfield is just using that power right now to do what it needs to do. And same thing with SL Green. SL Green, I know a lot of people are posting on SL Green like, my Roth is loving it. Yeah, good. I'm glad. People that bought SL Green, they didn't understand the fundamental value that Class A trophy assets of New York City had. They're not going anywhere,
Right.
And the company's good. They're recovering. I think the recovery on Brookfield is going to happen in the next 2-3 years. In the meantime, you get to enjoy a preferred dividends. By the way, you can't cut them either. You can only
12%.
Pause them.
Yeah,
12%. It's like, come on, it's easy.
And it's not monthly; it's quarterly. So basically, you're getting 3% every quarter of your investment back, and you're buying it at a 50% discount. So it's like, and I was wrong. Azure Blue posted this. It's redeemable, mid 2026. So if you buy it, you basically have to wait. What is that? 30 months, and you're buying it for $13 today. If it lasts until, which I anticipate it will, for the next 30 months. Then you'll basically be able to get 100% return on your initial invested capital and a 3% dividend on your money, yield on cost. Obviously, if it goes back to 25%, you're not getting that. You're getting a 6.25%, right? Because you look at this, it's 6.25% Class A. It's half price, so you're getting basically 12.5%, because you're buying it at half price. But yeah, I think things like that. There's things ripe like that all over the market. You could do these things on bonds. You can do these things on preferred shares. I think that this is something that I'm looking out for as well. There's a couple things that are like trading at $20, and I'm like, actually probably wouldn't be a bad place to park it for $20. But you have to be cautious. Not everyone trades at $25, right? Some of them might trade. Sorry, not every one of them is callable at $25. Some of them are at 50. Some of them are at 1,000. So you really have to just double. Some of them are at 40. So you really have to double check. Like, you might go into it being like, ooh, this is, let's just say, overpriced. Like I should not really look into this, but in reality, it's trading at $35 because it's a $40 callable opportunity rather than 25. So just be sure that you look. Oh yeah, I did actually want to get your thoughts because we haven't talked about Disney. They released earnings either today or yesterday, and I forgot to sell them, to be honest with you. I was actually going to sell them when it got to 95 the other day, but I'm kind of glad I didn't, because I have a very small position. It's like 50 shares, so it's like negligible almost. But I'm surprised that it's back above $100, believe it or not, for Disney. And I was curious. I saw some news yesterday about them collaborating with Fox and everybody else to kind of create a central sports broadcasting website or network or something like that, in collaboration with ESPN. And then you also saw them increase the dividend today by 50%, and also talked about Epic Games with their purchase of like a partial ownership of Epic Games, like $1.5 billion. I don't know how much ownership that gives them in Epic Games, but I'm curious on your thoughts because you were previously bullish on a turnaround at Disney.
Yeah, I mean, it's from a financial standpoint, they are turning around. In terms of the other part, the cultural part, they're not necessarily doing that well. But I think, okay, so there's two hats that I'm going to put on here. The hat that I'll say is more fundamentals basis. Like Disney's a good business. All right. They've got a lot of IP that they can monetize with so many things. So I don't think that there's a problem with Disney generating money. Okay. But I'm going to put on the other hat now, which is just a cult, like a normal person. I think long term, they're going to be losing out on a lot of business. So one of the things that believe it or not, that not a lot of people are talking about, which is not good, is their subscriber count actually went down. Did you see that? Yeah. So go
No, I
down,
did not.
scroll down to their numbers.
Which is interesting because their ops income is up 86%.
Because they raised prices. They raised prices,
Yeah.
introduced an ad tier, scroll down, scroll down. I'm not even
I mean,
sure
when
they
I have my
mentioned it.
mic in my face, so I can't really
Yeah.
get the best view
Sorry.
of it. No, that's not your fault. That's mine.
Yeah. Keep
Dividend
going.
30% or 30 cents. That's entertainment.
So
DTC. Here we go.
okay, there you go. So look at the subscribers for domestic user subscribers for them, right? It actually flattened out and went down a little bit. Can you believe that? The only reason why they increased the money is because they raised prices and introduced an ad tier. So
Right.
they're topping out in terms of growth for domestic growth. And even international, they're like not really there, right? So I think this was a move by Bob Iger to basically, because right now they're dealing with an activist position with Nelson Peltz coming after them. So in order to basically, to fight that off, they really, really needed a lot of basically shareholders to be confident in them. So Bob Iger said what he needed to do. He made the capital decisions, which is to do buybacks and dividends and everything
Oh,
else.
me, guy. But let's
But
do some quick math, right? Like,
Mhm.
so you lose 1% of your subscribers in the domestic market. But then if you look at the ARPU, you went from 750 to 815. So you lose 1%, but in terms of growth, you go up in terms of ARPU 8.5 to 9%. So it's like,
Mhm.
okay, I get that. Where it is kind of concerning, I guess, is the ARPU for international went down, which I think is pretty surprising. Like going up 65 cents quarter in a sequential quarter, I think that's crazy. Like, so raising prices helped in the domestic market, but I'm really curious as to why. I guess it says mix of subscribers to promotional offerings. So I don't know if that's the crap in India. They did like the Hotstar or whatever. I don't know if
Yeah,
it's
yeah,
something
they're
associated
gonna
with
be
that.
selling that asset. I think they're gonna be selling that out or something. But overall, that's a challenge for them. This is
Yeah.
gonna be one of those things that if they were not if they were not on this vanguard of the culture war where they're pushing a lot of these weird, DEI initiatives and everything else, I don't necessarily. I think that they could have kept up with growth and eventually got to like Netflix levels. Because the content that they have is really good content, but the newer content seems very just out of touch with what people want, and because of that, people don't necessarily find value in it. But they have such a torrid history of just like amazing content before that they can
Mhm,
live off of that for some time. So I'd
mhm.
say short term, this was really good news for them. Long term, I'm not so sure. I hope that Nelson Peltz comes in and really just changes things up, remove some of the stuff that's happening. But yeah, I mean, look at their look at some of their other thing. Their domestic parks and international. That's what's really helping them because now compared to last year, a lot more things are open. You know, so
It's operating income remained flat.
yeah.
I'm just getting my eyes into it for the first time.
Hmm.
Yeah, Hotstar still losing money.
Yeah.
But ESPN making money
Yeah.
for once. So
Yep.
interesting. It's very interesting. Hulu actually is up a little bit as well. 1.2
Hmm.
subscribers up comparatively to the last quarter. So 48.5 to 49.7. And I was
Yeah.
looking at this. This is pretty insane. It just in the last. This is where it's kind of like, when is it going to break? And I think this is kind of getting to a point where you're seeing it is like just looking at live TV. Not too long ago, a year ago, it's $87. Now it's $93, almost 94. And so over the 1 year, you're up almost, $9. Like that's pretty insane when you um, talk about it. And then same thing with what you're looking at here, on a year over year basis, you went from 595 ARPU to 815. It's close to $3. So you're raising prices almost 60%, on an average customer basis. And um, it's pretty crazy. I think that's why you're starting to see, people. One, I think with everything that was going on, Elon saying to cancel Disney, etc., like late in the quarter last year, I think, and then also you have just folks kind of getting beat up with these increase in prices, by 60% year over year. But if you think about it in that perspective, they've only gone down 500,000 subscribers, but they've gone up 60% in their actual revenue. So it's like it's working for them. So,
Yeah.
but
I'm
I'm
telling you,
curious
like,
what movies they got coming out. Sorry, go ahead. I'm just looking.
yeah. So this is the thing that you have to keep in mind. They also are a large conglomerate with other things. So I would say I don't know what the first Omen is. Kingdom of the Apes. I think that'll do okay. I don't know what Young Woman and the Sea is. Inside Out 2. I don't know if that.
The
Like I
Pixar,
said,
yeah.
I don't know what a lot of these things are gonna do in the future for in terms of like growth for them. But
This
I
might be
know that's
crazy though.
yeah,
Alien.
like some of the ones that I would say that it's not gonna be great is like this new Snow White sequel. Like I think that one's gonna be dead on arrival, right?
Yeah.
But we'll see. We'll see. Maybe they
I'm
really
curious.
I'm
Is
telling
this
you, man, it's
Captain America going to be with what's his face, or is it going to be with
Anthony Mackie. It's gonna be
Is
that
it?
one.
Hell yeah!
Yeah.
That's the first one
Yeah.
with Anthony Mackie, right?
Yeah, I mean, we could watch some trailers. Let's see the what's the
Dude,
first
don't.
one called? The first Omen? Oh yeah, we
Yeah,
can't because then they'll get demonetized.
I don't really care.
Yeah. No,
Yeah.
no, no, no. I'm gonna leave it out. No, it's just
Blade, Zootopia, Blade, like Blade,
yeah,
or a different Blade.
yeah. I wonder who's the new Blade. Let me see. Blade.
Like we're talking Blade, like Anthony Snipes Blade, like that. That's what we're talking about.
Not
Same thing.
Anthony Snipes. Wesley Snipes, not
Wesley
Anthony.
Snipes. Yeah, sorry. I'm sorry. Thank you for correcting me. And then
I mean,
Avatar
this guy.
3.
It's Marshall Ali. He's doing it. Okay, he actually
Who?
could pass for a good Blade. This guy.
Yeah, sure.
Hold on. All right.
Yeah,
I don't know if we get demonetized. Whatever. If we do, we do. Right.
yeah,
It's
I don't know.
hold on. It's no. I'm not gonna play the whole thing. I just put this guy right here.
Oh,
You know
dude,
who?
he would kill it. It looks like it's Wesley
Yeah.
Snipes, pretty much.
Yeah.
Yeah.
So yeah. So
Oh, dude,
I
he
think
looks sick. I love those glasses. Shit.
yeah. Look at that.
I
So
love
I
that.
think I
What
think
was he in that I loved that he played? Oh, wasn't he? No. Oh crap. Why am I? That's like one of the more recent things that I watched
the
that I
Green
absolutely.
Book. The Green Book.
No, that's not it.
No.
I never saw. Is that what is that? I don't know
He
what the
was
Green Book.
okay. So some of the things that he was in that I remember him from is the Green Book was he co-starred with what's his name? Um, whatever. So he was in the Green Book. He was also in House of Cards. Oh yes, he was in Battle Alita Battle Angel.
I
Yep.
think I
Yep.
remember from House of Cards. That's where I think I remember
Yeah.
him from. But
Moonlight. He was in Moonlight.
he was in
Yeah.
something else, man. That I
Yeah.
anyway, it's not important. Um,
Yeah.
so I want to hear your thoughts on PayPal. I just got done Bootleg Weekly with Hot Tevis in the chat, and
Is it really called Bootleg Weekly?
maybe it's a working title. I don't know. Tevis, hook us
Did they
up.
really call it that? Bootleg Weekly?
I guess, man, and maybe Tevis and can give some ideas
Okay.
as to why. But um, I'm curious of your thoughts. I'm very optimistic for you guys. It's going to take quarters, right? But what about it did you like? What about it did you not like? I know we kind of glanced over it, 5-10 minutes ago, but I'm kind of curious. What do you see as positives that are ongoing, and what do you think that needs to be worked on? And do you
At
think a lot of
Disney?
it's just good? No, PayPal. And do you think that it's just going to
Okay.
be this is going to take a couple quarters before it really starts to hit home? I know we glanced over it, but
I don't have a I don't
you
have a
don't.
lot of
Okay.
opinions. The new CEO has to be given enough time to basically either produce results or that's when you can effectively judge. I would say the first thing he did was just get new people on board, put them in the right places. And now my DD is going to be around those people because I want to see, like, okay, who did he put in charge of what? And I want to see what their background is, what their history is, how they've performed in the past. And then you can go from there. And then also, like I said, a lot of people are expecting too much too quickly. You got to give the guy some time to come in and make the changes happen. I mean, don't give him so much of a leash where you're sitting with him for 5 years and you underperform. I mean, that's what happened to me and John Chen over at BlackBerry. When he came in, I was super excited because he'd been this great CEO at SAP, and BlackBerry's basically gone nowhere and actually is probably going to die out sooner rather than later. But yeah, that's what I would say. We have to give Alex Chris a chance to prove himself. The company's still generating tremendous amounts of cash flow. They're using it to buy back shares. So I think the valuation of PayPal is good because that alone will hold the market, hold the stock price, pretty okay. Like I don't think there's a lot of room for downside with Palantir. I mean, with PayPal. So
Yeah, yeah.
but I don't know if there's a lot of upside at this point either. Not until this guy can prove that he can run this business, he can return it back to growth. You know.
Yeah, it needs a little bit of time, and that's kind of what we talked about 15-20 minutes ago. I'm very hopeful for. I have a lot of friends like yourself and many others that are in PayPal, so I'm hoping in the long term it continues to look well. Something that was surprising to me, and I think that I don't know, I have a new theory as to what might be happening here, but uh, S&P 500 over 5,000. I thought if you asked me in 2013 2014 when I first started investing, would I ever see the day? And shit, here we are, 5,000 on the S&P. What I have been pretty surprised about is we took a little bit of a tumble right after the FOMC meeting, um, thinking that we might be having a turnaround. Here we are now on a pretty good run over the past 5 days alone, and actually looks like it's continuing. But you did see it kind of flatline. It looks like it's flatlining at about 5,000 overnight. My question is, and this is my theory. Do you think we're going to tap 5,000 and see the retracement, or do you think we're going to continue to blast through like we have over the past, say, 2-3 months, it seems like at this point, where it's continuing to move up and to the right?
I mean, I think it will retrace a little bit. We've seen just earnings this year have been relatively good. There's a lot of positivity there. AI has helped operationally, like a lot of companies become very efficient. So that's been a big thing. I mean, we did see the October lows and going into a little bit of November, the market's rallied pretty hard since. I would say just at this point, be cautious. That's all. I don't know when a pullback is coming, but if it's to be believed, and I'm on the same board as Tom Lee. in saying that we could see about 6 to 7% retracement. So if you think about S&P at 5,000, a 6% retracement would be what? Like what is that? Like 4,700 roughly,
Yeah,
right?
or 5%.
So
Yeah.
yeah, which is not that bad. That's like literally January.
Mhm.
We just go back to January levels, we'll see. We'll see.
Yeah, I mean, if you're talking 5-10% pullback, you're talking about where we were mid last year at a 10%, or like you said, January.
Yeah.
Basically, 5% is here, 10% is here. I think that even if you do blow through this, you'll see a stopping point for a couple days before it blows through. They'll see some resistance there for sure. Like I said, I'm not a technicals guy, so I'm talking out of my ass. But I just am so surprised that we've continued to see. After we had this kind of leg up above 4,500-ish, 4,600-ish, I honestly thought that you'd see a little bit of a pause. This is the previous all-time highs in 2021 for the S&P. I guess it was January 2022 for this all-time high in the S&P. And I thought, we were going to hang flat and eventually roll over after the FOMC. And here we have. We've rolled on another 4 or 5% since then. And my thought process lately has been, okay, we're getting a little bit of exuberance out. Some people wanted to get back into the markets. Maybe they're taking advantage of the people that were potentially selling out. And now that you're saying, oh shit, is the market going to continue to run? They're hoping retail's buying back in, and eventually institutionals are going to take some profits. That's my current thoughts. I don't really know. I'm not a short-term kind of guy. But the portfolio for me is looking pretty nice. Palantir is
Yeah.
up there. Rocket Labs are covering a little bit. I bought 2,000 shares. I don't know if I said this yesterday. About 2,000 shares additional of Rocket Lab at like low fours, and now it's back, hopefully going across the $4.30 mark. So, in terms of positions that I've been buying over the past few months, I think that this is as good as any. And I'm curious to see at what point do you kind of start seeing this retracement, because it kind of feels a little frothy in this respect. Like it feels like a shoe is about to drop. And I'm kind of just sitting here being like, why am I anyway? Just some thoughts.
I'd say this is where you just have to be. I would say look for the high quality companies that may be a little bit overbought right now, and just wait until you see a pullback, and then you could pull the trigger. But I don't know. I'm not sure. I'd say
I hope we
yeah.
get a pullback, because I got a bonus in March. We get our annual bonuses in March and April, so I'm like hoping that you see. But anyway, I might save that on the side for another investment property. You never know.
Listen, we might see higher inflation numbers keep coming, in which case, a lot of people are expecting cuts. Maybe they don't happen until the end of the year. Right now my projection is June, but I could be wrong, man. Like, listen, if inflation keeps up, and the job market is strong, the Fed has no reason to cut. And if
Yep.
the Fed has no reason to cut, a lot of these companies that have run up in the anticipation for cuts are going to take a nosedive, so
Yeah.
just keep that in mind.
I think the verbiage from the FOMC has changed. I mean, Jerome has backed off. He used to be like 2% means 2%, my guys, and now he's kind of like, we never said it had to get to 2%, just it had a path to 2%. And it's like the verbiage does mean a lot to me, and when you're playing the read between the lines game of like, what is it saying in between the lines? It's like, well, what exactly are you looking for in terms of the right things to put you in the right direction? And so I think at the end of the day, to me, it means that, I don't know, inflation. I'm curious to see what ends up happening with it. Oil's kind of staying flat, so in that respect, I think I don't know. I really have no idea what's going to happen with it. I'm still thinking that May is too early. Um,
Mm.
Shit, natural gas is down below $2. Like, holy shit. So
Yeah,
anyway,
man. Yeah.
um, just it's interesting. I'm really curious what ends up happening with it, but it's one of those things where it's like, until we get another FOMC meeting, I'm kind of just sitting here being like, I don't know, but it's not important, right? I'm just going to continue to stack cash and invest prudently where I think is the best place.
You know what's funny? For 2025, I'm expecting deflation. I know that sounds weird, but I think we get deflation.
What
You know,
specific sectors though? Just overall?
overall, I think we get deflation. Why? Because China is going to be stimulating the shit out of their economy, and I think they're going to be exporting that deflation to us in goods.
Ah,
So if it comes to that, and the Fed at the same time starts to cut interest rates, I think what's going to happen is a lot more housing is going to come on the market, and that increase in inventory, which nobody will buy in anticipation for further rate cuts, will boost up um, inventory levels. And the inventory levels go up, prices have to be cut, which is shelter being a large component is going to be very deflationary. So that's what I'm thinking, which means that the Fed will have cover in 2025 to make multiple cuts that are necessary. So I'd say China's the area that I'd focus in on. But I do think that some parts of the Chinese some Chinese companies have bottomed. I think that they're in their 2008 2009 moment, right? Which means that if you really want to invest in some Chinese names, buy them and just forget about them for like 5 years, because it's going to be a while. I think there's going to be a lot of volatility. You can see with Alibaba right now. Alibaba did their earnings, and they went down, and they had decent numbers, but their revenue was actually flat. So maybe there's some market share loss to Pinduoduo. I don't know. I don't track a lot of Chinese names. Their cloud revenue was super flat, which didn't make any sense to me because they're the largest cloud provider. You would think that their cloud would actually be growing, but maybe that's the impact coming from NVIDIA not being able to sell them chips, in which case a lot of Chinese companies may have to contract with outside of us. So
yeah. I wanted to end on this. So you were talking a little bit about potential for deflation. I'm trying to find the damn graph, Chris, where you have the individual categories of what I'm losing it. And I was looking in this drop down, and I'm like not finding it. Maybe it's this one.
it says more chart
No.
pack. Oh, the more chart package. Just
Maybe
go
that's
that.
what it is.
And then you could see it based on different sectors. You know what? Maybe we'll cover this tomorrow. Let's
Yeah,
let's
that
do it
might be a good
tomorrow.
one. Yeah. All right. Much appreciated. I'm trying to think if there's anything else. As always, is there any crazy earnings coming out tomorrow? I'm gonna look at Paycom after this call, and see what else is out there. I'm curious to see what happened with Paycom, but I think somebody
Yeah.
asked you about it. In the long term, I
I
think
haven't
it's
I
gonna be
haven't looked
fine.
at it. Long term,
Yeah,
they'll be fine. Yeah. But
exactly. I know a buddy of mine. He's been investing at Paycom. He's taken the opportunity with the pullback to buy more. So interesting. I'm curious to see what happens with Celsius, man. It's back up to $58. We'll see if it goes back towards 50 or if it continues to burst through $60 ahead of earnings. That'll be an
yeah,
interesting one to follow for the rest of the month.
I don't know if anyone that important is putting up any numbers tomorrow. Brookfield Corporation for us is, so this way I think I'll see that. Cloudflare on the SaaS side, Cameco for the uranium folks. Let's see, S&P Global, okay, AstraZeneca,
Comico, I
Trans,
guess somebody said.
yeah, Br- British American Tobacco. Hershey
Enbridge.
is reporting tomorrow, so
That's
yeah.
another one. I'm curious. When do we think that? I know we're going to end it, but when do you think cocoa prices are going to topple over, and when are we going to go
I don't
long
know.
on Hershey, man?
I don't know, man. I don't know. Maybe next year sometime. Let me see. We there could be some value in it to get ahead of it, but I don't know.
Yeah.
Let's see.
Yeah,
So
that's a developing one. I don't have any thoughts or opinions, but we'll see.
yeah,
All right, my friend. Thank you as always. It's a great Cashflow Chronicles. This guy's will be not available after we close out. It'll be available whenever I can download it tomorrow and upload it to the new channel. But if you guys are interested in seeing more Cashflow Chronicles, the description there is a Cashflow Chronicles TV link that you can see or yesterday's previous episode that we did. It was a lot of fun. We had Hot Tavis join us. We talked a little bit about Celsius. If you want a little more Celsius color, you can have that.
we got to reach
On
out to
there.
Jonah. I reached out to him on Twitter because I want him to come on
Yeah.
and just explain some of the stuff around Celsius because he's a big bull on Celsius.
Cool.
So be
And
interesting.
I asked Hot Tavis yesterday if he wants to live stream it. I think it's after hours on the 28th. more than happy if you would like to live stream it with us. But I know that's kind of your sleepy time ahead of work, so don't feel obligated. But we'll figure it out. We can talk more about it when we get closer.
Yep, sounds good, man.
Yep. Thank you guys. Talk to you guys tomorrow.
Later.
Cheers.
Bye.